I'm giving you the safest bet, which is when price is moving away, it's likely not to come back. So you will take a safe trade. This is the way I used to trade. All right, this is the way I used to trade. I will buy it as price is coming down to the level, and I got burnt a lot. Okay, I got burnt a lot. Sometimes it'll get there and then it'll just blow through it, and I'll not take my loss because I don't want to take the loss, and then price will go against me. And it did that quite a lot, and that's why I changed the way I trade into going into for price to give me some sort of a rejection. Okay, it should give me a bounce. We call it breaking market structure, right? Give me a bounce, break structure, and then give me a retracement. Yeah, when it does that, I know that price is not gonna go down, because price is doing this and it's broken to the upside, so the retracement shouldn't continue going down. It should retrace and continue going up. So that's how, from losing a lot of money back in the days, that's how I changed to trade. So with that said, we have gone to the first target. Usually when it does that, I don't want to get in on the retracement. However, this level is still valid. I would just be cautious when price gets here. Let's push the stop a little bit up. I'll be cautious when price gets here because of what the dollar is doing, right? If the dollar is going to bounce and go all the way up here, I will want to get another rejection at least on the 15 or 1 hour time frame. Okay, so when price gets down here for a retracement, I want to see this. Yeah, give me a bounce just like I'm looking for on the 4 hour. I'll wait for that to happen on the 1 hour, something like this or something like this. Yeah, give me a swing low, break it, come back in. So once I see the swing low form here, then I'll be happy to go in for a long. All right, I'll be happy to go in for a long. But if it doesn't give me that, then there's a likelihood that price might do this. Okay, so I want price to get here, give me a rejection, and then I'll take it back up again. So for those of you waiting for this, that's how I will trade it. Let price get here on the hourly, give me some form of a rejection, and then I'll take it back up again. I so like this equal high. Yeah, the daily is in an uptrend, so I still like this equal high. All right, this is clean equal high. Yeah, so I still fancy price going up here. If we do lose this low, then my attention goes right back to the daily, back to the level I called out yesterday. My attention comes down here. Yeah, but let's see if we will get that. Let's see if price will get here and give us the bounce to go and take out this equal high. Let's go back to euro. Okay, euro. Yeah, see what it's doing now. It needs to take out this high. It's just trying to leave equal highs and then come back down. If we do get the bounce on dollar, okay, this equal high will be left clean for a next raid. So this price will come back down, maybe on the 4-hour into this high, and then go and run it. Okay. Double tops and double bottoms are very, very attracted to price, because that's where money will be sitting in for the funds, for the big money, for those who move the market. That's where money sits for them. Okay, so they like to take price there. Yeah, they like to take price to where there is equal tops and equal bottoms. Okay, so when you see that, that's why I'll show you one on Aussie New Zealand when we get to Aussie New Zealand. Yeah, and they do that to trap the support and resistance traders as well. They get them in. It's not just retail that trades support and resistance. Some of the banks, you know, they trade support and resistance as well. So price has got here and rejected. When it's coming back again, they will be looking for, when price gets back up to that level, let's say price get down here, right, and it comes back, they'll be looking for some form of a rejection again, and it might give them, and then comes back and then call it another resistance, and then it'll blow through it. That's why I don't like equal highs when I'm trading, right? When I'm taking any position and I see equal high, if I'm going short and I see equal highs, I get nervous, or I don't like to take that trade. Why? Because that could be a trap that they're gonna say this is the equal high, right? And I'm setting up here, which is what is on Aussie yen. I'll show you. We could do this and clean this equal high before dropping, right? So I don't like selling or buying when I see equal highs near that level. So let's see if dollar euro is gonna give us this. Looking at what is placed in now, looking at what is done now currently, it's a high, I would say 60% chance this is gonna retrace. Yeah, it's gonna come back down. Yeah, I could be wrong, but if we trade above this candle, if you trade above this candle, let me delete that and draw a line here. All right, if we trade right, if we trade above that down candle, I will look for a retracement back to it, and then I'll target this high. Yeah, I'll target that high. If we don't go down and we trade above this with a up candle like this, okay, if we trade above it like this, any retracement back to that same down candle, I'll be taking a long to come and take out this high. Yeah, so that is where I stand right now with this. If we don't come down for a retracement, whatever happens, this high is gonna go, right? How they do it is subject to what the dollar will do for now. But if they do come down here, that will be even better, because it will open up the profit target. Yeah, but if they do it here, nevertheless, it's the same thing. That high is gonna go. Okay, but I wanted to trade above this high, give me a retracement, and then I'll buy it long to go and clear that. Alright, so let's see what they will do. I will favor a retracement before they move up.